I research retirement strategy for a living, and one of the most common things I hear from people in their 50s and early 60s is this: Medicare is basically free once you hit 65. That is completely understandable. It's what many of us were told. But the data tells a different story. According to the Centers for Medicare and Medicaid Services, the standard 2025 Medicare Part B premium is $185 per month. That number, though, is just the floor. Earn above $103,000 as a single filer or $206,000 as a couple, and the government adds a surcharge on top. That surcharge is called IRMAA, and most people headed into retirement have never heard of it. By the end of this video, you will know exactly what IRMAA is, how it is calculated, which of your dollars trigger it, and what options retirees are exploring to reduce it legally. What is IRMAA, and why does it exist? IRMAA stands for Income-Related Monthly Adjustment Amount. It is not a penalty. It is not a mistake on your Medicare bill. It is a federal policy built into the Medicare Modernization Act of 2003 that requires higher income beneficiaries to pay a larger share of Medicare's actual cost. The government's position is simple. Medicare is subsidized by taxpayers. If your income is above a certain threshold, you can afford to shoulder more of the cost yourself. Whether you agree with that reasoning or not, it is the law. And right now, according to CMS, roughly 8% of Medicare beneficiaries pay IRMAA in a given year. That percentage sounds small. But as more Americans draw down IRAs, collect Social Security, and sell appreciated assets in retirement, more of them are quietly crossing those income thresholds every year. This matters whether you think of yourself as wealthy or not. A $30,000 IRA withdrawal on top of Social Security income can be enough to trigger it. Your specific situation, your filing status, your income sources, your timing will determine whether IRMAA applies to you. How your income is calculated. The 2-year look back. Here is where IRMAA gets surprising for most people. Medicare does not look at what you earned this year. It looks at your tax return from 2 years ago. This is called the look-back period. When you enroll in Medicare in 2025, the Social Security Administration uses your 2023 Modified Adjusted Gross Income, your MAGI, to set your premium. A MAGI includes wages, self-employment income, capital gains, taxable Social Security benefits, IRA distributions, pension income, and even tax-exempt municipal bond interest. That last one catches people off guard. Municipal bond interest is tax-exempt for income tax purposes, but it is added back in for IRMAA calculations. According to the IRS, your MAGI for Medicare purposes is your adjusted gross income plus tax-exempt interest income. So a retiree who sells a rental property, takes a large IRA distribution, or does a big Roth conversion in 2023 may see an unexpectedly high Medicare bill in 2025. The 2-year gap means the surprise often arrives before people realize what caused it. Your filing status changes the math significantly here. Single filers hit the first IRMAA threshold at $106,000 in 2025. Married couples filing jointly hit it at $212,000. Married couples filing separately face a much steeper curve. Their surcharge kicks in at just $106,000 and jumps dramatically from there. The 5 IRMAA brackets, what you actually pay. Let's look at the numbers. According to CMS, Medicare Part B in 2025 has 5 IRMAA surcharge tiers above the standard premium. The standard premium is $185 per month. At the first income tier, $106,000 to $133,000 for single filers. The total monthly Part B premium rises to $259. At the second tier, $133,000 to $167,000. It rises to $370. At the third tier, $167,000 to $200,000. It reaches $480.90. At the fourth tier, $200,000 to $500,000, it climbs to $591.90. And at the highest tier, above $500,000 in income, the monthly Part B premium is $628.90. That is nearly 3.5 times the standard premium. And IRMAA applies to Part D, your prescription drug coverage, as well. CMS sets separate Part D surcharges at each tier, ranging from $13.70 to $85.80 per month in 2025 on top of your plan's base premium. For a married couple, those numbers double. A couple in the second IRMAA tier could pay over $8,800 per year in Medicare premiums alone. That is money that needs to come from somewhere in your retirement budget. Whether that affects your plan depends entirely on your income sources and how they're structured. Strategies. Retirees are exploring to reduce IRMAA exposure. Now, and I want to be careful here, I am not telling you what to do, but I can walk you through what financial planners discuss with clients in this situation and what the tax code allows. The first concept is income smoothing. Because IRMAA uses a 2-year look-back, large one-time income events, a property sale, a big IRA withdrawal, a business distribution, can spike your Medicare costs years later. Some retirees work with advisors to spread those distributions over multiple years rather than taking them all at once. The second concept is Roth conversions done strategically before Medicare enrollment. Roth IRA withdrawals in retirement are not included in MAGI for IRMAA purposes. According to the IRS, qualified Roth distributions are tax-free and do not count toward your Medicare income calculation. So retirees who convert pre-tax dollars to Roth in their late 50s or early 60s, before Medicare begins at 65, may reduce their future MAGI in retirement. The trade-off is paying taxes on the conversion now. Your tax bracket and timeline matter enormously here. The third option fewer people know about is called a life-changing event appeal. If your income dropped significantly due to a qualifying event, retirement, divorce, death of a spouse, loss of income-producing property, you can ask Social Security to use a more recent tax year rather than the 2-year-old return. According to SSA, the qualifying events include retirement, reduced work hours, and certain other circumstances. You file SSA Form SSA 44. This does not guarantee a lower premium, but it is a legitimate avenue for people whose income genuinely changed. Again, how any of this applies to you depends on your specific income structure, filing status, and timing. What late starters should know before 65. If you are in your 40s or 50s and just learning about IRMAA today, that is actually good timing. You still have runway to account for this in your planning. The Federal Reserve's 2023 Survey of Consumer Finances found that the median retirement savings for Americans aged 55 to 64 is $185,000. For many people in that range, IRMAA may not be an immediate concern because their income in retirement may stay below the threshold. But here's the nuance. Even moderate retirement income can push you closer to the threshold than you expect. Social Security income, up to 85% of which can be taxable, according to the SSA, adds to your MAGI. Required minimum distributions from traditional IRAs add to your MAGI. A part-time job adds to your MAGI. These amounts stack. And the thresholds, while indexed for inflation, do not always keep pace with the combination of income sources a typical retiree draws from. The earlier you understand the mechanics, the more options you have. That is true whether you are a late starter catching up or someone who saved diligently and now faces unexpected costs on the back end. Disclaimer: I'm not a licensed financial advisor. This is general education, not personalized advice. Consult a fiduciary before acting. Closing and CT. IRMAA is one of those retirement costs that almost nobody budgets for until they get the bill. Understanding it now, before you enroll in Medicare, gives you time and options. If this video helped you see something you had not seen before, please subscribe to the channel. We publish new retirement strategy content every week, built specifically for people who are building their plan later in life. Coming up next, we are going to look at how required minimum distributions work and why the amount the IRS forces you to withdraw each year may be larger than you expect. That one connects directly to everything we covered today. I will see you there. This video may contain affiliate links. I only recommend tools I use personally.